Welcome to the Stock Market Morning Prep video for Tuesday, June 10th. Well, we got a little bit of movement, still continuation of the uptrend from the last 13 days, but we were really kind of quiet, very, very quiet. I think markets are digesting its move. Dow Jones up 18, NASDAQ up 14, S&P up $1.83, and the Russell up $10.67. That was the biggest mover of the five indices that we follow. So the theme remains the same. We remain bullish, right? The markets remain bullish with pretty much not a catalyst in sight to take this market lower. So what do? And we're going to dial it down to an even shorter term time frame. As you all know, we like to look at the McClellan Oscillator, the NYMO. However, since the McClellan Oscillator hasn't really been doing its job, so to speak, we're going to take it down to the bar chart momentum index, the daily chart. And this here is sort of like the McClellan Oscillator, and it reads overbought. It's an oscillator, it reads overbought, oversold. And anytime it gets above 101 or below 99, it's oversold and or overbought above 101. So we're right there right now, as you can see on Thursday, and then Friday, and then today. So we're still right there. If we were to gap up tomorrow, I do think that the market's being at extensions, 1618 extensions, clearing 2 extensions. I do think that the markets are a little tight. But remember, when you have the algorithms playing along and the high-frequency traders playing along, you don't need much to run the markets up, especially in the summer months when you have the moves heavily exaggerated. However, I do think that the markets are still poised for risk aversion, and I do think that the markets are headed indeed lower. Now, when, obviously no one knows. That's the big bonus question here. So in the meantime, you need to stick with the trend. You do not want to be laying into shorts. Now, unless you have good bunch of long plays in your account, then it's okay to start putting some short bets on because you're balancing your book out. And sometimes that doesn't work, but it's better off than just being short the market when this market, as you can see, has not gone down for 13 trading days. So we try to look for the best setups. And again, we mentioned yesterday's video and several times last week that we're trying to look for stocks with bases that have been basing and then looking for that breakout. Remember, when they have already made their move lower, which is a good sign. So when you have all this euphoria in stocks that are fairly valued and overbought, they're going to come for these stocks eventually. Now, we are counter trend trading these moves, so there are going to be a lot of stops that you're going to take because the fact that the move just popped a little bit and then rolled back over again, because it is counter trend. So just remember that. If you're not good at counter trend trading, I would say step aside, be patient, and let's wait for that pullback to come, which I do think that eventually is around the corner. Can we go higher? Absolutely. No one knows, but remember, the markets are made to fool the masses, and we're not looking for I'm not looking to say, oh, I'm going to be right. It has nothing to do with that. It has to do with the fact that the markets are where the markets are. We as professionals need to trade the markets, which is the best possible scenario that would play out, that would give us the best percentile of a stock trade that's going to be in our favor. Okay? All right, so let's look at this. We have this bar chart momentum indicator. I have mentioned that to you. You see that? So we're right about there. Here's another thing that I like is this VIX. Now, we haven't seen this low since, I think, 2010. We did break out below this Bollinger Band, as you can see, and then today we closed in it. That indeed gave a buy signal to the VIX. Now, obviously, the VIX is not what it used to be, but if we do have a buy side of VIX, that would put a sell signal in equity. So let's see what happens tomorrow. But all this is it's a heads up. That's all it is. Saying, you know what? Let me just be cautious here on what's going on here. Now let's look at the 10-year. We could still see the spread is continue to widen. We did get a little bit of a pop, but this needs to come in or this needs to catch up so that yield and the S&P are one. Right now, as you can see, they're diverging pretty much most of the first and second, the latter part of this first quarter and all of the second quarter. So this needs to tighten one way or the other. So we're going to keep monitoring that. But you can see that this should not be. All right, there's a lot of things that should not be in this market, but it is what it is, unfortunately. All right, home construction. I'd like to see this is lumber prices, lumber futures, and here is the ITB home construction ETF. Now, this should not be as well, right? This should all be in sync. So you could weigh an argument saying, well, wait a minute, lower lumber prices is a bigger benefit for housing, for the housing stocks like the home builders. That is true, but that also means that's lack of demand. Okay, so if the builders aren't buying lumber to build houses, that's a problem. So I don't know how this is going to happen, but to me, if it were for a trade, it would only be a trade, meaning that I would be flat at the end of the day. But I don't like when I see something like this, I like to just stay away and just let this come back to the mean and then see where this goes. Okay, but looking at the home builders, and I do like them for a trade. Now let's go into the indexes. You can see here this ascending triangle in Japanese yen. This is where the Bank of Japan talked down their currency, and now we're still on this upward trend line of this ascending triangle. Now, if we lose it, then again all bets are off. We'll probably retest the lows way in this left-hand corner. Okay. Let's take a look at the bonds, and as you know, we are at a 1272 extension. Usually kind of stalls the rally out a little bit. That's fine. The 1618 coincides perfect with this inverted head and shoulders here that we determined: left shoulder, head, right shoulder. And then we're going to see where it goes from there. Can it go there? Absolutely. I think bonds are in a short squeeze. I've mentioned that several times already. But we do have a negative pattern here. We have a bear flag. Hasn't broken the flag yet, but next stop would be the 200. And we'll see where that goes from there. But again, holding up relatively well while the markets are holding up. So, that's definitely a warning sign. Okay, also another warning sign, the ES. We have two extensions that we met. Okay, and we're sitting at the second extension. The third extension would be way, way up in here. Really, you have a 200 to a 2% extension, and then you'll have way up at these extension levels here at 240. Do we get there? To be quite honest, I really do think we would get there by year's end. I don't know if it's going to be, in the next couple of weeks. Not that it can't, because we've been really tacking on 20, 30 S&P points at a clip pretty much most of this move. So it can happen. I wouldn't doubt it, but I would think that this would be more towards a year-end number. And I do think that the markets are looking very healthy for a weekly. But the more you grind higher, the worse the sell-off's going to be. Remember, there will always be one or two sell-offs. Remember that. Everybody is one-sided here. Everybody's on one side of the boat, and that's what scares me right now. All right, let's take a look at diamonds. As you can see, diamonds made all new highs again. Looking for that 17,000 in the Dow Jones Industrial Average. We have the transports, again, made new highs yet again. And this, to me, is going to be one of my favorite shorts to look to short, because this is totally unsustainable. The whole market actually is unsustainable. However, we're not looking to short because we feel it's unsustainable. We're looking to short the market, or at least the transports here in this point, because it is unsustainable and it gave us a trigger to get short. Okay, we're not going to do so. If you're going to leg into a trade small, that's one thing. Having your stops at a certain area, maybe a Fibonacci extension, and if it did break that extension, then you would obviously get out of the trade. So that's also something that you can do, but just understand what the risks are when you're in a trade. Okay, and then we got two more. We got the IWM, biggest percent gain today. And this looks okay. As you can see, we broke this bearish symmetry. We had this bull flag. We broke out of it on Thursday, Friday, and of course today. So again, another decent sized move, but we need to see where this is going to take us. Okay. And lastly, it's going to be the IWM. Now, I got to check on the weighting with Apple now that it's a $92 stock. Is it heavily still weighted in the Qs, or is that not the case? So I have to check that. Today was the first day it's trading at 92. So I'll get back to you on that tomorrow on tomorrow's video. Okay, but have a great day, everybody. Enjoy the trading, and hopefully you're doing okay. And again, if when in doubt, stay out. And I definitely believe that cash is a position. You do 2 or 3 good trades, whether it be a day or the week, and you still made money until this cycle ends. Remember, markets run in cycles. There are easy cycles, there are bad cycles. You just, there are cycles that markets don't do anything, and you, as a professional trader, should understand that and learn how to just sit on your hands. All right, have a great day trading, everybody. Take care.